Welcome back. You're watching Market Sense. To get a fundamental view of the equity markets, we've got with us on the show today Nipun Mehta, who's a market expert. He joins us right here in the studio. Now, Nipun, to begin with, just focusing on the domestic markets and looking at what's been playing out in Delhi over the last few days, how worried are the equity markets about the likelihood of India going to early polls?
Well, if the markets are worried, they're not showing it as far as the market movement is concerned, as far as FI buying is concerned. But very clearly, I think it can only turn out to be positive if there are possible elections and you have probably policy reforms that could be coming about. My sense is that you are seeing FIs probably pumping in money in anticipation of any positive development coming in either on the election front or on the policy front. Now, either of which one could be positive as far as markets are concerned. And that's where you're really seeing the rally and the FI inflows that are there. Having said that, I think very clearly if you observe, there are just about a few stocks which are actually driving the index up. So if you eliminate those stocks, the Reliance, the HUL, the ITC, the TCS Infi, and the FMCG and IT pack really, and some part of the oil pack. There's very limited market movement that has really happened, both as far as large caps are concerned and as far as mid caps are concerned. So there is just about very selective market movement, and this kind of a up move really can misguide investors into thinking that yes, there's a tremendous market rally happening. But really, when one looks at the mid caps and the prices in comparison to, let's say, a year back, there has been very limited movement, though the markets are higher by at least 5 to 10% in comparison to what they were just about a year back.
Sure, but Nipun, one view is that FI money is coming into India only because there aren't very many other avenues to put that money in. So, because India is looking a little better on a relative basis is why the money is coming in. Would you agree to that?
In terms of valuations, when you look at FY13 or FY14 valuations, which are at about either a 14.5 or 13 and about 13 odd, a little higher than 13 for FY14, the valuations are relatively rich, particularly given the fact that, again, when you look at the quarterly results, very clearly, if you eliminate some of the larger companies, the growth hasn't been very significant. There are concerns on the India front as well. So I would not entirely agree that there's very limited option as far as FIs are concerned in terms of pumping in money into emerging markets, really. Alternate asset classes earlier had been gaining a lot of traction. So you'd seen a fair amount of fund infusion into gold, into other currencies, which ensured that there was either a severe or up move or upward momentum as far as gold was concerned, intermittently as far as dollar was concerned. But that hasn't really happened. So you're seeing a fair amount of fund infusion into emerging markets, into equities, into India. And I entirely, when you look at the domestic fundamentals, it's not entirely, we are not entirely in agreement with the FI theory that yes, there are limited options. Yes, probably China has slowed down, which is a concern as far as fund infusion is concerned. You aren't seeing the same kind of growth as far as Russia or Brazil are concerned, and that's where fund infusion isn't really happening in those economies. The Eurozone and the US aren't showing the same kind of traction, or they could really significantly turn around only about a year or two from now. So there could be limited options, and because of which India could be getting inflows. But really, when one looks at the domestic economics or fundamentals, there are concerns that are there.
Right, and speaking of the slowdown in China, in fact, that seems to be fueling commodity prices, particularly gold, which is at a record high. In fact, China's factory output significantly shrank for the month of July, according to an HSBC survey. Lack of new export orders, that really worsened the economic slump, stoking hopes of a stimulus program from Asia's biggest economy. The manufacturing in China, that's been contracting now for over 9 months. But the one in August was the sharpest, and China has avoided a stimulus package since the 2008 crisis and preferred opening up new sectors for private capital. But most of the market participants hope that the latest slump in economic activity may force the central bank to opt for monetary easing. In fact, you also had the minutes of the latest Fed Reserve policy, and that suggested that the meeting suggested that it is likely to deliver another round of monetary stimulus unless the economy improves considerably. Policymakers were also categorical about their dissatisfaction with the outlook. The Fed said, and I quote, "Many members judge that additional monetary accommodation would likely be warranted fairly soon unless incoming information pointed to a substantial and sustainable strengthening in the pace of economic recovery." Fed officials also see a significant risk to an already weak U.S. economy, which grew at a sluggish 1.5% annual rate in the second quarter. The risks include a worsening of Europe's financial strains and looming U.S. budget cuts, as well as tax hikes or a fiscal cliff.
All right, on that note, let's check in on gold, which is climbing towards record highs after the Fed minutes and China's PMI data, which came out earlier today, which is fueling hopes that you will see monetary action coming out of China. Let's go across to Manisha Gupta, a commodities editor, who's going to take us through what the outlook for gold prices here in India is.
Well, thank you for that, George. As you pointed out, it's trading at 16-week highs in the international markets after weak data coming in from China, the concerns from Europe as well. So markets in some sense are factoring in further monetary easing coming in from US and Beijing in some sense, and that has been supportive for the international markets. The Indian calculations, of course, have been much higher in that sense. We have been holding 30,000 for many weeks now. And for it's the second straight day when we have seen a record high coming in for the Indian market. 30,600 has been crossed on the futures, and we have seen 30,800 trading as in the spot markets as well. The rupee calculation is something that has been supportive, and apart from that, it's the festive season in the Indian markets underway, which also has been supportive, and markets are expecting the buying only to pick up from these current levels as well in the Indian markets there. Going forward in the international markets, it's the 1700 mark that the investors are working out with, while in the Indian markets you could be looking at 31,000, and that is where you could see some consolidation coming in.
Okay, thanks very much, Manisha. So gold futures at a record high. Nipun, just wanted to bring this to your notice. The Indian prices have been gaining for 7 days in a row. Do you think that gold is the way to go and we are going to see more steep?
Well, gold has to a degree stagnated over the last year or two. If you see the price band of 27,000 to 30,000 or so, of course it's broken out now. Very clearly, when you look at probably a month from now, when the monsoons get over and the festive season starts and you have Diwali and the wedding season starting, you'll clearly see greater demand coming in from that segment, which just could push prices further, depending, of course, on the currency movement as well, because that's what also in India determines the gold price movement. However, if you really see what the earlier finance minister had said and what the government seems to be sort of indicating is that they would really like to have greater savings being funneled into either banks or the post office schemes, as opposed to gold, which is typically the traditional savings method that a lot of the Indians really adopt. The moment you have money flowing into either post office schemes or banks, you're really likely to see growth as far as those sectors are concerned, those segments are concerned, and liquid cash coming into the economy and helping growth of infrastructure. So I would think the government would generally try and push for these kind of alternate savings as opposed to saving in gold, and which could, over maybe the next couple of years, probably dampen demand a bit if there are tax swaps that are given for alternative investments as opposed to gold. But in the short term, very clearly, I think the festive season will ensure that there is greater demand coming about.
Right, and Nipun, you know, if we look at some of the brokerage calls today, you had Credit Suisse with initiated cover on the FMCG sector, and they've gone overweight on all of the large cap as well as mid cap names. What's your sense in a volatile market like this? Is it best to stick to defensives in order to cushion the fall?
Well, I've constantly maintained that yes, valuations for all of them look steep, but despite that, I think that's the segment which is continuing to show growth. That's the segment which is addressing the rural economy and is constantly growing. There is significant appetite for another 20 to 25% growth, at least for the next few quarters, which is ensuring that despite higher valuations, they either are termed as defensives or they aren't really stopping in terms of investor or institutional investment, despite these high valuations. And I think they will continue to, when you have limited alternative growth opportunities that you're seeing in industry sectors, I think this one sector will, despite higher valuations, continue to attract investments.
Okay, thanks very much, Nipun, for taking the time out and joining in. Some important information coming in from Finance Minister saying that there is no plan to increase the fuel as well as fertilizer prices as of now.
Right, I think we should check in then on the prices of OMC stocks, which ideally ought to have reacted to that comment coming in from the Finance Minister. Remember, there was this expectation that, of course, the petrol prices would go up, and we did see the prices of OMC stocks climb over the last couple of days, basis that diesel prices, to the extent that you've got the Finance Minister clearly conveying that there's going to be no addressing of those prices for the moment, is somewhere likely going to weigh on the stocks of these companies. And there you have it. IOC is down. Rashtriya Chemical Fertilizers, that's in the green by about a 0.5 percentage point. But I think focus on the OMCs, stocks like HPCL, IOC, all of them will come under a fair bit of pressure going forward.
And they are as we speak, so you've got them very muted. And as George pointed out, it's been a fairly strong up move in anticipation of a hike in prices. But no, some clarification coming in from the Finance Minister that nothing of that sort is going to be declared. Let's take it straight to Rajat Bose then to identify his top trading ideas. Rajat, what's on your list?
I have three trading ideas. I mean, all three of them are buy calls, and they're showing quite a bit of momentum. To start with, I would say Voltas is already gaining traction. Even after I sent your research desk the trading recommendations, it has moved up with good volume as well as big strides in 5-minute charts. Target is 121.50 to about 123. Initially, I suggested a stop loss of 110, but that stop loss should be now upgraded to 112.80. And then there is Biocon. This stock is actually trying to get past a critical resistance level around 253, 254. Once it crosses that, the next level would be 259. Chances are that you would see Biocon breaking out just like Ranbaxy did, and it could move up to something like 275 going forward. Another stock that is waiting for a breakout and already looking pretty good on the end of day chart as well as on the intraday chart, that is APIL, Alstom India, and this is, I would put a stop loss below 394.80. Once 400 is crossed and sustained, then you will see it moving up to 408, but going forward in the short term, if 408 is cleared, then 427 to about 429 would be the target. So these three are, you can take them as short-term trades, you can take them as swing trades for a day or two. They are all looking pretty bullish. And one comment I would like to make here is that I referred to Deridian deferral as far as HPCL and BPCL or OMCs are concerned. Oil prices are still in a Deridian deferral mode.
Thanks very much, Rajat, for giving us all of those top trading ideas as well as a word on the OMC companies. We slip into a quick break right here on Market Sense, but the Manesar effect has sent most of the auto ancillary companies in top gear. So after this quick break, we'll touch base with the management of Ricoh Auto. Mr. Arvind Kapoor, Managing Director of the company, will join in live from New Delhi.